10 tips for building a strong financial foundation. Tip number 1. Create a budget. Creating a budget is the first step in building a strong financial foundation. A budget is a plan that shows how you plan to spend your money. It's important to know where your money is going so you can make informed decisions about how to save and invest it. There are many budgeting apps and tools available that can help you create a budget that works for you. When creating a budget, it's important to start by listing all of your income and expenses. Be sure to include all of your fixed expenses, such as rent or mortgage, utilities, and car payments, as well as your variable expenses, such as groceries and entertainment. Once you have a clear picture of where your money is going, you can start making adjustments. It's important to set realistic and achievable budgeting goals, such as reducing your expenses by a certain percentage or increasing your savings by a specific amount. And don't forget to review and adjust your budget regularly to ensure that it's still on track and working for you. Tip number 2. Pay off debt. Debt can be a major roadblock to building a strong financial foundation. High-interest credit card debt can eat away at your savings and make it difficult to achieve your financial goals. That's why it's important to focus on paying off high-interest debt first. This will free up more money to put towards savings and investments. One strategy for paying off debt is to use the snowball method. This involves paying off your smallest debts first while making the minimum payments on your larger debts. This can help you build momentum and motivation as you start to see progress. Another strategy is to pay off the debt with the highest interest rate first, which will save you the most money in interest charges in the long run. It's also important to avoid taking on new debt while you're working on paying off your existing debt. This means being mindful of your spending and making conscious decisions about where to allocate your money. And if you're struggling to pay off your debt, consider seeking help from a financial advisor or credit counseling service. Tip number 3. Build an emergency fund. An emergency fund is a savings account that you set aside for unexpected expenses. It's important to have an emergency fund in place because unexpected expenses can happen at any time and can be a major setback if you're not prepared. A good rule of thumb is to have 3 to 6 months worth of living expenses set aside in an emergency fund. An emergency fund is also a great way to reduce stress and anxiety caused by unexpected expenses. Knowing that you have money set aside for emergencies can give you peace of mind and allow you to focus on other aspects of your finances. You can start building an emergency fund by setting up automatic savings transfers to a dedicated savings account. You can also consider setting a specific savings goal for your emergency fund, such as saving $1,000 within the next 3 months, and then tracking your progress. Tip number 4. Invest for the long term. Investing is a great way to build wealth over time. But it's important to keep in mind that investing is a long-term game. It's important to be patient and not get caught up in short-term market fluctuations. A well-diversified portfolio that includes a mix of stocks, bonds, and cash is a good way to build a strong financial foundation. When it comes to investing, it's important to understand your risk tolerance and investment goals. This will help you determine the right mix of investments for your portfolio. It's also important to do your research and understand the potential risks and returns associated with each investment. It's also important to consider working with a financial advisor to help create a personalized investment strategy that aligns with your goals and risk tolerance. And don't forget to regularly review and adjust your investment portfolio to ensure that it's still aligned with your goals and risk tolerance. Tip number 5. Understand the power of compound interest. Compound interest is the interest earned on the interest you've already earned. It's a powerful tool that can help you grow your money over time. By investing early and often, you can take advantage of compound interest and build wealth faster. For example, if you invest $1,000 at an interest rate of 5% per year, after 1 year you would have $1,050. But if you leave that $1,050 invested, at the end of the second year, you would have $1,102.50. As you can see, the interest you earn in the second year is not only on the original $1,000, but also on the $50 in interest earned in the first year. So, the key to building wealth with compound interest is to start early and invest consistently over time. The longer your money is invested, the more time it has to grow through compound interest. Tip number 6. Live below your means. Living below your means is a key component of building a strong financial foundation. It's important to spend less than you earn so you can save and invest for the future. This means being mindful of your spending and making conscious decisions about where to allocate your money. One way to live below your means is to set spending limits for different areas of your budget, such as groceries, entertainment, and shopping. You can also consider cutting back on unnecessary expenses, such as subscription services or memberships you don't use. Another way to live below your means is to increase your income. This can be done by taking on a part-time job, freelancing, or starting a side business. Tip number 7. Be mindful of fees. Fees can eat away at your investment returns and make it more difficult to achieve your financial goals. That's why it's important to be mindful of the fees associated with your investments. Look for low-cost options and be sure to understand the fees associated with any investment before you invest. Fees can come in many forms, such as management fees, transaction fees, and account fees. Some investments have higher fees than others, so it's important to do your research and compare the fees associated with different investments. You can also consider using index funds or exchange-traded funds, ETFs, which tend to have lower fees than actively managed funds. And don't be afraid to negotiate or shop around for lower fees. Tip number 8. Protect your assets. Protecting your assets is an important part of building a strong financial foundation. This includes things like insurance, estate planning, and asset protection. It's important to have the right insurance in place to protect your assets in case of an unexpected event. And it's important to have a plan in place for how your assets will be distributed in case something happens to you. This includes having a will or trust, which will ensure that your assets are distributed according to your wishes. It's also important to consider the potential risks to your assets and take steps to protect them, such as creating a limited liability company, LLC, or purchasing umbrella insurance. Tip number 9. Educate yourself. The more you know about personal finance, the better equipped you'll be to make informed decisions about your money. There are countless resources available to help you learn about personal finance, including books, websites, and podcasts. The more you know, the better equipped you'll be to navigate the complex world of personal finance and make sound financial decisions. It's also important to stay up to date with current financial news and trends, as well as changes in government regulations and laws that may impact your financial situation. You can also consider taking a personal finance course or attending a workshop to gain a deeper understanding of key financial concepts. Additionally, working with a financial advisor or planner can be a great way to gain knowledge and expertise in personal finance. Tip number 10. Have a plan for the future. Finally, having a plan for the future is an important part of building a strong financial foundation. This includes setting specific financial goals and developing a plan to achieve them. It's important to set both short-term and long-term goals, such as paying off debt, building an emergency fund, saving for retirement, and buying a home. And it's important to regularly review and adjust your plan to ensure that it's still on track and aligned with your goals. Having a plan for the future can give you a sense of direction and purpose, and help you stay motivated and focused on achieving your financial goals. Conclusion. Building a strong financial foundation takes time, effort, and commitment. But by following these 10 tips, you can take control of your finances, reduce stress and anxiety, and set yourself up for a secure financial future. Remember, the key is to start early, be consistent, and stay informed. Thank you for watching our video on building a strong financial foundation. Remember to subscribe to our channel for more helpful tips and advice on personal finance. And if you have any questions or comments, please leave them in the comments section below.